All right,
We're live.
Episode 3 coming in hot.
Check.
It's gonna be a good one. I like
That's
this.
right. Excited.
All right, we're good to go.
All right. Hello, everyone, and welcome to another episode of the Lending Podcast. This is episode 3. We are your hosts. That's Jeff Jones.
Hello.
I'm John Burnham, and we are excited to bring some content to you today around the home buying process. So, what are we going to dive into today, Jeff?
Man, I'm excited about this one. So the home buying process, for those that are not familiar with it, we want to go over the different pieces that go into the pathway to your home ownership. So from pre-qualification to signing the docs and getting your keys, what each step could look like. And we're going to try to do it as fast as we can within our next 30 minutes to unpack it. So they have
so
good
many
expectations.
moving parts. Oh, yes.
Yeah.
So many moving parts. So, all right. So, let's jump in.
Let's jump in.
So in many cases, our first step is our phone rings, and it's one of our referral partners who says, hey, I have a potential buyer for you. They're looking to buy their first home or their 10th home or their investment property or whatever type of purchase they're looking into. This is probably designed more for our first-time buyers out there who may not be as educated on the process, or maybe you're a buyer who's purchased 10, 20 years ago. It's just been a while since you've been through the process and what's changed. And so we get that initial call, and the first step is we need to get pre-qualified, right? We need to get pre-approved. We're going to break down the difference between pre-qualification, pre-approval, and underwriting approval. This is what we like to call the 3 levels of approval, okay?
So wait, JB, you're telling me I can't just go shopping for a house without getting pre-approved?
I mean, you can, but it may not work out well for you.
I want to start seeing like 50 homes before I figure out my finances.
I would suggest getting pre-approved first.
I would bet my realtor would be real happy about that.
Definitely.
Well, I think that, even though I'm being sarcastic,
yes,
right? The reality is a lot of times people will just go on house listing websites and just start looking at what they want. And that's human nature. I mean, goodness gracious, I do it. But to figure out like your buying power right up front, how do we do that?
That's a really good point. And that's the key. I think and there's 2 numbers there. There's what's the price that you're approved for?
Yeah.
And then what's the payment that you really are looking to have as far as budget goes. So I think there's 2 really important distinctions there. In many cases, we'll pre-approve a client for more than what they really want to spend, and that's a smiley face, right? Okay, I'm approved for $500,000, but I really want to buy in the $400,000 range. But the opposite can happen too, where you're really looking at $500,000 homes. We do all the paperwork and the pre-approval discussion, and it's really more of a $400,000 price point that you're approved for. So it's really important to set the proper expectations up front, and so that you're armed with that information when you go out to look for homes. You know exactly what range you're looking for. It also helps your agent create a better search for you, a more targeted search when they set up your listing views and you start getting houses in your inbox that you want to look at, right?
Yeah. And I agree. I think a happier conversation when we do our consultations has been, what's your monthly budget? Because here's, a $350,000 house payment is this X a month. $450,000 house payment is this X a month. $550 is this X a month. Where are you within your budget?
That's right.
Right.
And give or take, right now it's roughly about $900 a month per $100,000 that you finance. So if you're financing a $300,000 mortgage, it's about $2,500 to $2,700 a month. If you're financing a $500,000 mortgage, it's probably $4,000 to $4,500 a month. Those are rough numbers. That's just so you can kind of get a feel for that. There are so many different types of loans, how to structure. This video really isn't going to get into the structure of the loan per se, but rather the process of getting you armed with clarity and certainty that you can buy, and your agent armed with the ability to go win your offer, right, when you put an offer in. So step 1, right? So we're going to go through the pre-qualification process. Now, pre-qualification and pre-approval are somewhat synonymous in the industry. Like, those terms are thrown around as the same thing. They are far from the same thing. So let's break down pre-qualification, pre-approval, and then underwriting approval. And so again, the 3 levels of approval. And so the pre-qualification is, we've had a conversation. We know where you work, how much you make, approximate cash in the bank. You monitor your own credit scores, let's say, so you kind of have an idea what your credit score is. So we have a feel for credit, income, and assets and debts. We talk about your car payments or student loans, credit card debts, minimums, whatever your payments are. And we can come up with a qualification number that is very high level. It's not worth the paper it's printed on. And this is where most lenders will stop. They'll have a good conversation, they'll send out the pre qualification. A buyer feels like they're armed and ready to go put an offer in, when in reality, all they've done is a very basic surface level discussion. And it's just not strong enough approval to go make an offer on a house.
Right. And so if you get a letter that says, pre-qualified, and you'll see different boxes checked because there are requirements and kind of guidelines to those different letters that are provided by
That's
a
right.
lender, right? So that pre-qualification letter will have things that are it'll say not verified with documents on certain items, whether that's credit or income or assets.
That's right.
And when it has those check boxes of not verified, then it's just a pre-qual letter. It's not actually a legitimate pre-approval letter, but that at least gives you a peace of mind of knowing, like, rule of thumb, I might be okay, but you're not getting much assurances
That's
in
right.
that pre-qual
And
letter.
we don't know, you don't know, is that loan really going to close? You can put an offer
Yeah.
in, get the house accepted. You've had a surface level conversation or maybe sent in a few documents to a bank.
Right.
They've reviewed some basics, and now you're in limbo and uncertain as to whether or not that loan will close.
Yeah.
And
So as a buyer, that sounds like a weak letter. So how do I get a better
all
pre-approval
right,
letter?
let's upgrade to a
Yeah.
pre-approval. So a pre-approval is you've sent in your documents. So you've sent in tax returns, you've sent in W-2s, paycheck stubs, and it's more important, I believe, for our self-employed clients to send in tax returns, for us to look at bank statements, look at the
Right.
debts. We see oftentimes where maybe a business, the client's business is paying some of the debts. We need to verify that the business is paying those debts so we can eliminate those debts on paper. So there's things that we can do once we've verified and really taken a deep dive on the documentation to get you, again, clarity and certainty as to what you can buy, what you can be approved for. So the pre-approval is you're fulfilling an application, filling out an application. We're pulling a credit report. We also pull soft credit pulls at the initial credit look. So we're not pulling a hard credit pull. That gives you the ability to have us view everything, but you don't have that hard credit pull that could actually drop your score a couple points, because they say 1 to 3 points is usually what that hard credit pull will do. And so the soft credit pull, along with supplying your documentation, send us the bank statements, send us your most recent paycheck stubs, send us your most recent 2 W-2s. We'd like to see tax returns as well, your ID, and any other debts, maybe from a divorce decree or from a business, anything else that you have obligations, IRS debt, judgments, things like that are going to surface at that pre-approval. Those are all the snakes in the grass that pop up later down the line sometimes when you've only done a pre-qualification.
And there's two goals in that, right? So one is to just get the right income and liabilities so we can do our ratios. And our ratios they have to fall within the guidelines for certain products. So that gives us the financial ratios. But then the red flags, snakes in the grass, that lets us see things that can possibly be deal killers down the road that we're trying to figure out solutions for up front.
That's right.
Right? Talk real quick. So one time I worked for a lender that charged credit reports during the application. So as a loan officer, the only thing we can charge at all, only money that we could possibly ask from a prospect, is please pay for your credit report before it's pulled.
That's right.
Many lenders don't charge up front. It's a part, of closing. And so when we are one of those lenders, we're not charging up front.
No.
So we're eating that credit pull right away. And we do that because we just don't want to have that hurdle for our borrowers right up front. But that can be something that some lenders will charge up front. And that will be the only thing they can charge up front before really the loan estimate signed.
That's right. And so many of our clients, when they make the application, they're really not ready to buy.
Right.
They're trying to figure out, okay, my lease is up in 6 months or 9 months. I'm just planning ahead. And we love those conversations. It's never too early to have that conversation. So the soft credit pull is actually a lower cost for us to pull that soft pull, and it's a benefit to the buyer that we're not pulling a hard pull when we're so
Yeah.
far out potentially. So it's a win-win in that regard. Now we have a client that's in a little more of a hurry. We're going to quickly do a hard credit pull after that soft pull. It counts as two. You're going to see that as two inquiries, but it's only one credit pull as far as the score goes, right? As far as the scoring algorithm counts that as one pull.
Yeah.
So that's a way that we can provide a service to our clients and give our agent partners and referral partners, clients, peace of mind that we're not just pulling credit reports, at will. We're only pulling them when we need to.
And there are certain loans, especially government loans, FHA, VA, that do require a hard pull just for us to run an automated underwriting.
That's right.
Just to verify if we're getting really close on those numbers and ratios, then we might need to, circle back with somebody and go, hey, we really do need a hard pull on this one to get it to start the underwriting approval.
That's right. And we typically can tell after we have the application, we have the soft pull, we have the financial documents, how quickly we may need to pull a hard credit pull and then have that conversation with our clients. And there's so much around that process that we could get into. It's just on our calls when we're talking to our clients and our referral partners, we're going to explain specific to your needs exactly what that process looks like for you. But generally speaking, the applications come in, it's a soft credit pull, and then we get those financial documents behind that. And it takes us about 24 to 48 hours on the high side to review those documents. Depends on the complexity of your situation, which we're going to unpack on that first call when we've figured out that what you're looking to do and we're identifying your goals. And so that pre-approval, at that point, when we've verified the information and we send out that pre-approval letter, 99.99% of those loans are going to close.
Yeah.
And there are very few situations. I mean, I'm talking in 22 years, there's probably been 5 situations where the loan is not approvable after a solid pre-approval. And that typically has to do with a job change,
life change,
a job loss, a life change, or the buyer deciding they're not going to move forward. And so it's really important to get through that piece to have that certainty.
Yeah.
And also, of course, going back to presenting your offer to a seller, when you've got certainty as a buyer and you can present that certainty to a seller, you're much more likely to get your offer accepted.
Right. And you and I have a similar point of view of like when I put out a pre-approval letter, my reputation's on the line.
That's right.
Right. So I am vouching for this person, then I'm going to get them to the closing table on time.
That's right.
That's what my pre-approval letter says. I'm getting them to the closing table on time.
That's right.
And I think that's just a big deal for a lot of lenders. If you are sending out pre-approvals left and right, and they're really pre-qualifications, you're not verifying everything, then your reputation is not going to work out in the long term. So it's okay. So we went over pre-qual, which is unverified, pre-approval, which is everything's verified. That's the big ticket items.
That's right.
And then the third level?
Third level is the underwriting approval. So the underwriting approval is what happens in many cases with a lot of lenders after the client's already under contract and through the option period and inspections, which we're going to talk about here in a second. And then the file goes to underwriting. At Benchmark, we do something different. We will take a pre-approved client and go ahead without a property address and submit your file to the underwriter. And so what does that do? That gives you another level of certainty that your file's actually approved through underwriting before you ever put an offer in. Now, the timing doesn't always work that way. You may you may call us first with the house. I found the house. Now I need the loan. We don't have that time, that luxury of time to submit to the underwriter for approval first.
Right.
So we're doing a thorough pre-approval. We're getting it into underwriting, and then we're meeting that financing timeline per the contract, which is called the third-party financing addendum. And so the key with the underwriting approval, let's say you can get this underwriting approval before you ever have a property. When your agent goes to submit an offer to the listing agent, they can put 0 days in that third-party financing. That's the number of days you need to get your loan approved. It's 0. Your loan's already approved. So how strong is that to a seller and a listing agent? When your file's already been through underwriting, you don't need a third-party financing timeline. You don't need a week or 2 weeks or 3 weeks to quote, get your loan approved. It's approved.
Right.
And so it's really given our buyers peace of mind. It's given our buyer's agent more leverage. It's given certainty to the seller. It's all those win-win-win things that help you secure the property, especially when there's 5 or 10 or one other buyer that's trying to buy that same house.
I love that. I think that the fully underwritten person, that is the hardest piece, right? So the two big things that are getting, approved is the people and then the property,
That's right.
right? So when the people are already fully underwritten, then the property, we're just needing an appraisal and verification of a few things from title, and we start balancing and we go through the whole closing process. But you're getting the biggest one out of the way right up front.
It's huge. And so Jeff touched on something really important. The property approval and the borrower approval are really two different
Right.
aspects to the loan. So like you said, getting that borrower approval checked off, you're approved.
Right.
Now it really is just down to the appraisal and insurance and title work.
Right.
Sometimes we don't even need an appraisal. Depends on the loan type and how much you're putting down. Those are conversations that we have down the line.
Yeah.
But that's a benefit to this market right now with our strong credit buyers and a good down payment of maybe 10 or more percent. Sometimes you don't even need an appraisal. So it's really interesting, how the industry has shifted. The focus that we're putting on that upfront buyer approval, that
Right.
underwriting approval, has really given the client certainty. And then, like Jeff said, we're just coming down to the property approval, which we'll talk about here in a little bit.
Good. Good. So if somebody, and a lot of it is going to be when we talk to borrowers, figuring out their timeline, right? How urgent are they to get into their home?
That's right.
And if we can start that underwriting approval, after we send out the pre-approval letter and we're like, hey, we'd love to start that underwriting approval. Now that you're pre-approved, let's start getting some deeper dive into what underwriting is going to look for and get those conditions cleared. So I think there's really, the only downside is if you don't want to provide docs up
That's
front.
right.
That's the only downside. But hopefully you've already passed that hurdle if you're serious about buying a home.
That's right. And occasionally we'll have a client that says, I just want to know surface level what I might be able to do. Like if I just give you my income, if I give
Yeah.
you my credit score, how much house can I buy? And those are great conversations. We'll welcome any conversation with the buyer to help
Right.
you educate, help you get some peace of mind, help your referral or your agent, our referral partner, get some clarity on your situation, especially nail down the timing. The interesting thing and what we found is as soon as we have those conversations, a lot of times the buyer has an elevated level of confidence.
Right.
I can actually do this. Then they go out and start looking at homes, and guess what? Now all of a sudden you want to put an offer in because you found that home.
The perfect home.
Why not check a few more boxes up front? Give
Right.
yourself that much more certainty and clarity, and find out what your payment's going to be, how much cash you're going to need out of pocket. And then what are the out-of-pocket expenses you're about to get yourself into, which is really what we're going to talk
Good
about
segue.
next. Yeah.
Good segue. All right. What's step number 2 is a realtor relationship.
That's right.
Choosing the right realtor.
That's right.
And 1 and 2 really kind of go hand in hand,
Yes.
right? So a lot of times people will go straight to a realtor first. Sometimes they go to a lender first. Really doesn't matter. But the whole point is you want to have a good team around you, right?
Yeah, I think when our phone rings, like I said, a lot of times it is our referral partner introducing those clients. We're humbled, we're honored to have those referral partners,
Right.
all of you out there that support us and trust us and our team, and we're excited to work with more of you out there. And then when we do get that buyer comes to us and they don't have an agent yet, we're really in a position to help educate you and find out your geography, what part of town are you looking in, what type of property you're looking at, and then we have a great base of referral partners we can send our clients to and say, you need to talk to this person, you need to talk to that person. And in the event that our buyers come in without an agent.
Mhm.
And so choosing the right realtor, super, super important. If you've already got that box checked, that's a huge step, to winning your home contract when you put in a contract, because it's really important, the communication between the agent on the buyer side, the agent on the listing side, which we touched on in episode 2. And so, I think now we're in the stage of we're going to put an offer in, right?
Yes.
We have that buyer approval, and maybe it's just a pre-approval because our timing is a little quicker. Maybe we've had a little more time to get that underwriting approval, which, by the way, takes about a week, so a business week. So it's not like it takes months to get that underwriting approval, but it doesn't happen in 24 hours. It takes a little bit of time to do verifications of employment and verify the loan terms before we submit it to an underwriter. So we're now in a position to put in an offer.
Right.
So walk us through that, kind of what you see, Jeff, and typically how that step works.
No, that's great. So at this time, you have your pre-approval letter, you have your realtor relationship. So you definitely want to make sure the realtor and your loan officer are talking about what this looks like. Is this going to be a conventional loan, an FHA loan? How much are they putting down? So all that should be in the pre-approval letter. That realtor should have it, and that goes with the offer that the realtor writes up. So that realtor and the loan officer are on the same page,
That's right.
and they're putting that offer in together, and that goes obviously to the selling agent, right? So it's not going to the owners, it's actually going to the owner's realtor. And we call that a listing agent, selling agent. So that's real to realtor conversations in a contract offer. And then we as lenders always like to offer, do you want me to call that seller and talk to them why our buyer is a strong buyer for that offer? And really, that's where the decision making starts happening if you get the deal or not.
That's right.
Right? Is offers in, the listing agent is talking with the seller to see if it's strong enough for them to choose. Right?
Yeah, and that relationship between buyer's agent, lender, buyer, our three-man, three-person team here
Right.
to present a unified front to the listing agent, us as a lender being able to say with confidence to a listing agent, this buyer is approved. We are going to get to the closing table. We're going to have a smooth process. It's not a perfect process, it's a smooth process,
Right.
meaning we're going to close on time. We're going to smooth out the bumps along the way, and we're going to communicate, and we're going to make sure we're hitting our milestones and giving that seller the confidence and the clarity and certainty we're going to get it closed. And so it's really, really important that we've gone through the due diligence up
Right.
front with the buyer, with you, so that we can have a confident conversation with the listing agent. Otherwise, we are really sticking our neck out there and saying this buyer is approved when in fact maybe it's wobbly and we don't know for sure. And so we don't want to put you in that position. We don't want to be in that position. We don't want the buyer's agent to be in that position. We present a really professional offer. The listing agent is excited about it. They hear from us, they accept it, and now we've got a contract.
Cool. If you want to go into a deeper dive on getting a winning offer in episode 2,
That's right.
It's phenomenal. That was a previous episode. That's a little shameless plug on the lending podcast. All right. So we want our offer.
Okay. We're celebrating.
We're
right?
celebrating. Can't pop the champagne yet
Now
unless
we
you
got a
like
little-
to celebrate. I celebrate all the time.
Got a little work to do.
Contracts accepted. So what money do I need right away as a buyer now that my contract's accepted? Because that's an expectation a lot of people don't understand.
This is big. So many of our clients do not realize this. So there are probably 4 or 5 checks that you're going to be writing within a week of getting that contract accepted. So let's say it's accepted today, right? So within 48 hours, or maybe it's 72 hours now, I believe your option money and your earnest money, which are 2 numbers that your agent has talked to you about on the contract.
Mm-hmm.
Option fee is usually anywhere from $100 to $500, depends on the timing and depends on the sales price, etc. And earnest money is usually 1% of the contract price. So if it's a $400,000 house, you're writing a check for $4,000 and maybe another check for say $250 for an option fee. That number varies. Mm-hmm. So you're writing checks for $4,200 within just a couple of days of signing the contract. Now the option fee is your unrestricted right to cancel. So you have X number of days, it's usually less than a week, and you can cancel, terminate the contract anytime within those first few days, right? And that check goes to the seller. That money is non-refundable. You do not get it back if you back out of the contract.
And during that time, this is when the speed of getting an inspector onto the property is really critical, because a lot of people get an inspector there within,
24 to
48 hours because they want eyes on this property of a professional that knows if there's going to be problems with the property while they still have their option time to back out without money on the table.
Home inspection so critical, and that's something you'll discuss more in depth with your real estate agent and the property itself. But we're an advocate for that. I personally have bought and sold numerous properties. You want to get a home inspection. 99.99% of the time. Let's just say 100%.
You don't know what you can't see.
You don't know what you can't see. So you're gonna get a home inspection,
and that's out of pocket as well.
And that's out of pocket, and that does not have anything really to do with the financing.
It won't show up on your loan estimate. It won't show up on our financing. It's something outside.
And think about that home inspection as a cost that you would incur if even if you were paying cash, right? So if you didn't
Right.
have a lender involved, you're still writing an option check, you're still writing an earnest money check, and you're still getting a home inspection. That home inspection is going to be done and not part of the financing terms,
And
right?
realtors are really good people that have, home inspectors kind of in their pocket for referral relationships. So they set a lot of that up for you.
Absolutely. Yeah, usually within a day or two, like Jeff said.
Yeah.
So it's really good. So those are three different checks you might write within a day or two of the contract getting accepted. The next step, let's say we get through home inspection and
Okay.
possibly some negotiations. That's why it's so important to have a buyer's agent on your side, negotiating with the listing side if there
Mm-hmm.
are some items in that inspection that need to be addressed.
So we're on day like 3 now, right?
We're on day three.
So
We're pedaling fast. We're already
our
doing
loan
things that
estimate.
we need to
Mm-hmm.
do on the loan side. However, we haven't spent that appraisal money check yet. So
Not yet.
we're about to have our buyer pay that fee.
And that happens pretty much as soon as like the loan estimate's signed.
That's right. That's right. So we send out our initial loan application paperwork, which comes after the contract is signed. You're going to most likely DocuSign the contract. You're going to probably DocuSign your loan application documents as well, which happens right after you get your contract accepted. And so you've written your option check, you've written your earnest check, you've gotten your home inspection, and now let's say we're through the inspection period, we're going to order that appraisal.
Yeah.
And so appraisal companies get paid directly from our buyers. So we don't have receivables with our appraisal companies, and that increases our level of service back to our clients. So we ask our clients to pay those appraisals up front so that the appraiser has no receivables. They're not chasing down money for appraisals, and their turn times are so much faster. We're getting appraisals back in like 3 to 7 days, just
Yeah.
depends.
Yeah. So right out of the bat, that's quite a bit of money just for people to expect. Let's throw a general scenario, $400,000 home.
Sure.
The first check you're writing is your option.
That's right.
It could be anywhere from 100 to $500. Second check, just for escrow to hold, is your earnest money.
That's right.
Then you're paying your inspector. That could be anywhere from
Probably
3 to 400.
Right.
And then you're buying your appraisal, which is anywhere from 5 to 600.
That's right.
Ours today is like 525 for basic. If there's a lot of property, it goes up in value. If you got over 10 acres, if it's commercial, those prices go up.
That's right.
And so you've written those big checks. Now what?
Now we're on to the next step.
Now we're running.
Now
right?
we're running full speed.
Yeah.
And keep in mind the option check does count towards your total money out of pocket for the closing. Your
And
earnest
earnest,
money
yeah.
check counts towards your total out of pocket for closing. Your appraisal check is
all
part
those show
of-
up on our paperwork.
That's right. And you'll get credit for all of those items at closing, which
Right.
in that tally might have been close to $5,000 in that example. So
Right.
you're going to see credits for those items at closing. That's money that you're putting into the deal. Inspection is totally separate. You won't see that anywhere on the closing documents.
Right.
That's outside of the closing documents. So then we're in this underwriting phase of the process, right? So we may have already underwritten your file and gotten you approved as a buyer, or maybe we only had the pre-approval, but now we're working on the property approval and the buyer approval to put those together to get it final approved so we can go to closing. And that process is usually 1 to 2 weeks. So we're through the inspection process. We've ordered the appraisal. That takes, let's say, a week. We get that back. We're submitting for final approval. This is where additional documents may be needed.
Including your homeowner's insurance.
Definitely got to get that.
Are they paying for that up front?
No, that gets paid at closing.
Okay.
But they need a binder. They need an insurance binder with their company before closing. So we need to know and have the confidence as a lender that the property is, number one, it's insurable, and number two, for a price that the buyer can afford.
Okay. That's good. So they need to find a good insurance agent. We have referrals. Realtor might have referrals.
Absolutely.
Good thing is just to get, in this day and age, prices have gone way up on homeowners insurance.
Homeowners insurance has gone way up.
So if you don't know what you're doing, please talk to your loan officer or your realtor or both and get advice as you're shopping homeowners insurance.
Yeah, and the most important thing there is this is, in most cases, your biggest asset. You're about to close on your biggest asset. Could be a $500,000 property. Let's not skimp on the thing that protects that asset. We want a good, robust insurance policy, not overpay, but not be underinsured. And there's some things we're going to talk about. when we're hitting these milestones along the way, we're coaching and guiding you through this process too, especially
Right.
into our referral partners too. We're giving feedback on here's the appraisal timing, here's what we found out about insurance. We had a little bit of a curveball over here. Let's talk about it, smooth it out, and get through it so we can get to closing.
And as we're kind of coming down to the home stretch of all these things we're talking about, if you ever need to or want to reach out to us directly, and we can get you what we call like a pathway or a timeline, and it'll spell out each step of the way for you. So, and it's got cute visuals, and it just gives you the right expectations to your pathway to home ownership.
That's right, because there are so many moving parts and so much behind the scenes that our
Right.
clients don't see, our referral partners don't see. We, as fully transparent lenders, will show you all of that, right? If
Yeah.
you'd like to see all of that. But the truth of the matter is, when you're in the operating room, you don't really want to know what all the surgeon is doing. You just want to make
Yeah.
sure that the surgeon is going to take care of you and get you out of surgery nice and healthy, so you can be on a road to a fast recovery. So me personally, I don't want to know all those details behind the scenes, but we will show them all to you if you want
The
to see
gory
them.
bits.
That's right. That's right.
Yeah.
For sure. So all right. So now we've got our appraisal back in, we've got our loan final approved, and we're prepping for closing. Which is usually about a week before closing. And a typical, I would say, a standard closing timeline is 30 days in the industry. However, we've closed loans in 12 days, 15 days, 60 days. So it really comes back to what is the fit for the seller,
Yeah.
what is the fit for the buyer, how quickly or how slowly does it need to happen, and then we'll work the timeline
And if you've
accordingly.
already gone through the underwriting approval, the full underwriting approval, the last one I did that, we closed in 13 days,
It's
right?
fast.
So it can be pretty quick. I
Mhm.
mean, 10 or less days is fine if you're fully underwritten, and we can get the appraisal out there in time.
That's right.
So that's good. So now we're all the way through getting the loan final approved, getting the property final approved. You have your homeowner's insurance, and you're about to close. What do we expect of funding?
Well, this is big. So a couple of questions that we get often is, how do I get my money to the title company? Like, how do I bring my money?
Yeah.
What do I do to get this thing closed?
Yeah.
Well, first of all, in Texas, most of the time you're going to close at a title company, right? We do have mobile notary services. You could close in our office in theory, and we could send the documents back over to the title company. But most of the time, our clients go into a closing. Some of the documents can be signed electronically. Some of the
That's
documents
nice.
need to be signed by hand. Some of
Hmm.
the notarized documents have to be signed by hand in most cases.
Right.
And so the best way to get your funds to the title company is either a cashier's check or a wire, which aren't just the best ways, they're actually the only two ways, right? So
They are. Yeah.
you can't bring a briefcase of cash to the title company. We've
Because the
had people
money has
ask.
to be verified in an account,
That's
in
right.
an escrow account.
That's right. Now, there are some nuances to your specific situation about the funds. We will coach you through that prior to closing.
Yeah.
The biggest thing that I see is when clients have out of state banks
Mm-hmm.
and they're trying to send a wire, and their bank is based in California or Florida or wherever.
So
And
timing's off.
there's not a physical location. So you need to be ahead of time. You need to be communicating with your bank. I'm purchasing a home. I'm going to need to send a wire. How do I do it without having to fly out there to California and then
Right.
fly back to do your wire? And most of the wires can be sent through your home computer. There's a
Mhm.
verification process, or you can do it over the phone. But just get out in front of that.
Right.
Don't get to the morning of closing and then realize that you're not able to send a wire. That can really cause some significant delays.
Yeah. And a big shout out to our title companies. They will give you the instructions for wiring your information. They're not going to send it by email. Wire fraud is always on the rise. It never stops, it seems like, and people will hijack emails. So email is not a way to get your wiring instructions. Just
That's right.
heads up. So you're going to be calling the title company or showing up in person, and they're going to give you the information that way.
And never, ever, ever accept accept wiring instructions from your lender. We do not send
That's
them. And that's what
right.
Jeff kind of was
Yeah.
talking about. Impersonations happen, emails get hacked.
Right.
They'll impersonate a lender and send over wiring instructions. It looks like it's coming from us. It's not. And this is
It's always going to come from title, and it's
Mhm.
not going to come by email.
That's
So
right.
in person or phone.
And if it does, always call to verify. So little plug on just protecting yourself. And you can also do a cashier's check, right? If your bank's right down the road, go in, grab your cashier's check, call the title company ahead of time, make sure they're okay with that. I always encourage my clients, if you're going to do a cashier's check, take it a day before closing.
Yeah.
Drop it off a day early. Let the title company have time to call and verify it, because they will do that to prevent any delays on your side to get it funded.
Good. Wonderful.
Okay. And now we're funding.
That's a
So
big day.
funding this is where we're high fiving. I mean, don't get me wrong. We're high fiving when we get the clear to close. The clear to close is when we know we're going to be going to closing in the next few days. But funding is huge. Funding is when you now own this home, right? And the title company has the ability to spend the money. They've gotten money from the buyer. They've gotten the money from the lender. And now they're paying all the third parties. They're paying the seller their proceeds. They're paying that insurance policy at closing. They're paying the lender. They're just cutting checks and they're spending all the money. And that's called disbursement. So funding and disbursement are two different things. And I think a lot of people get those misinterpreted, or they
they're
act like those are
confusing
synonymous.
names.
Yeah.
So that's one of the reasons why we're, it's good to listen to this kind of podcast or something else. So when somebody's funded, I'm ready to get my money as, a seller.
That's right. When it's funded, you own the home as a buyer and your seller has sold the home. But yeah, they've sold the home. But when disbursement happens, that's when monies actually go out to all parties. So the funding doesn't necessarily mean that the seller which could be a builder as well. It could be a builder or an individual seller, right? Whoever the seller is. And so a lot of times we'll see buyers sign all their documents, title company gets funding authorization. It's late in the day on a Friday or late in the day of any day of the week. And they want the keys, and wires haven't necessarily hit the respective banks to show that the money has already been dispersed. And that is one of those things where we've seen that on holiday weekends.
It adds a lot of frustration.
It can add some frustration. So that's something we will be out in front of as the lender, with the buyer's agent, with the listing agent. What are the requirements for our buyer, for you to take possession of this home? Yeah. Because when you've signed and the seller signed and we've authorized funding, you own the home. It's just there are some sellers out there that won't let you take possession until they get their wire, they get their money. And that's a little tricky part of the process. So we're on top of that.
I mean, I think of one way to get in front of expectation for a buyer that really just wants keys to their home, and knowing when they can get those keys. Yeah. That's a great question to the title company.
Great question,
because they're the ones releasing keys usually.
And agents, true. Yeah, a lot of times the title company has the keys, because this all revolves around the moving in process, right? Yeah. So if you're closing on a Friday, your moving truck is sitting there on a Friday. Our job is to make sure that you've got those keys, as quickly as you can. We've got funding as quickly as we can, but we can't control the keys process, right? Yeah. So we know
we could.
That's right. Wish we could. We know your moving truck is sitting outside. Yeah. You've performed, you've signed, we've funded it, and now you may not be able to take possession. So those are just some things. Again, that's down the line. We'll smooth that out during the process. We've seen that pop up, and we try to get ahead of it.
Yeah, good, wonderful. There is one last piece we have on our list. So you have your keys, you're in your home, but there is what we call post-close.
That's right. Post-closing communication. So you own your home, you've got your keys, you've moved in. Now what? Well, first off, you're going to get a ton of mail. You're going to get a lot of stuff in the mail, because your deed of trust, which is the document, one of the documents you signed at closing,
public information,
public record. Yes. And so moving companies can send mail to you.
You're now on a junk mail list. Everyone gets put on it.
A massive junk mail. There is some opt-out instructions.
There is some opt-out instructions.
We can help you. We can help you opt out of some of that communication. And I think the main thing is communicate with your lender, whether we've helped you with your financing or not. Right. Communicate back to your originator, right? Your loan officer. When you get mail that looks official and you're not sure if it's something you should act on or not, because there's a lot of marketing efforts out there to new homeowners. And a lot of times they're asking for a check. They're saying, send us $65 and we'll send you a verified copy of your deed, or we'll file your homestead exemption for you. You don't need to do that. All that stuff is free. Your title company has copies of the documents. Your lender has copies of the documents. Your agent's going to have some of that information that you may need. Right. So communicate back to your team, your agent, lender, title team, and just make sure that you're not.
So any confusing mail, ask your loan officer. We're here for you.
That's right. We're here for you. And we will be, subsequent up until making your first payment and beyond, right? Because you definitely want to make sure that you're that you're making your first payment correctly, which is usually 30 to 60 days after closing. And that'll be another episode.
Good. Yeah, I feel like we've done well on this one. We're kind of
We
wrapped it up.
we knocked out a few things.
We had
We
11
did.
different items on the pathway. We had getting your loan approved with the pre-approval underwriting, getting a good realtor, putting in your offer, contract getting accepted. Woohoo! That's a fun one. Getting inspection and the timing of it, getting your appraisal,
That's right.
and doing the final approval of the loan and final approval of the property, going through the final closing process and getting your CD, funding, taking possession of your home, getting your keys, popping the champagne,
Popping the champagne.
and then the post close.
I love it. I love it. Well, we're here if you have additional questions. Thank you guys for tuning in today. Please subscribe, share, pass it on, and we look forward to the next episode.
Thank you all. Have a good day.
Take care.